The reverse in the Bitcoin market downturn is in progress. Simply put, we're on our way to the moon. Stay vigilant, as time is of the essence. Wondering why? Well, in approximately 60 days, the SEC is set to make a crucial decision on the Bitcoin ETF proposed by ARK Invest. The deadline for the ARK Invest Bitcoin ETF is January 10th, and on that day, the SEC will either approve it or reject it. There's a chance they may deny ARK's application, paving the way for BlackRock to potentially secure the first position in March, around mid-March, to be more specific. However, here's the crux of the matter. The SEC's position is precarious. Their loss in the Grayscale case saw a judge dismissing their reasons for delaying a spot Bitcoin ETF as baseless. Ongoing discussions between the SEC and Bitcoin ETF applicants, numerous amendments to applications, and the SEC outlining their expectations all make a denial on January 10th less probable. So, we're less than 2 months away, perhaps slightly more, from the potential approval of a spot Bitcoin ETF. Brace yourselves for potential market upheaval. The unpredictability of markets is a given. While January 10th is the designated date, the approval might not occur on that day. It could be tomorrow, an hour from now, or 59 days and 23 hours later. The timing of the SEC's decision remains uncertain. Michael Saylor, in a recent appearance on Fox News, predicted that a spot Bitcoin ETF would likely double the demand for Bitcoin at a minimum. The caveat? Prices are expected to surge as investors rush to acquire these ETF products, flocking to platforms like Coinbase to purchase the physical Bitcoin backing them. We're talking about a surge in demand worth billions, and it's not confined to the US. Hong Kong has recently announced plans to either launch or explore a Bitcoin spot ETF. This development is noteworthy given Hong Kong's role as China's gateway to global capital. It's no secret that Beijing is aware of this and intends for Hong Kong to become a global crypto hub, with a spot Bitcoin ETF potentially facilitating more mainland Chinese investment in Bitcoin. Despite continuous crackdowns and government interventions in the market, China remains a major player in the global Bitcoin market. Despite facing various obstacles, individuals in China continue to find ways to participate in trading. The emergence of regulated products trading in Hong Kong provides new opportunities for accessing the Bitcoin spot ETF. Therefore, it is crucial to stay vigilant, as the Chinese are keen not to be left behind. They are observing the imminent launch of spot Bitcoin ETFs in the United States and are eager to ensure their investors can partake in the opportunities as well. Now, shifting gears to some intriguing insights from Michael Saylor, who explores key factors that he believes could drive Bitcoin to a staggering $5 million. Returning to Michael Saylor's bullish predictions, he outlines various catalysts that could propel Bitcoin to $5 million. While some may find this figure ambitious, a more conservative estimate for this cycle is around 150K, still representing a remarkable outcome. The prospect of reaching 5 million is a long-term projection, not something expected to happen overnight or in the next year. It signifies significant potential for over a 100x return on Bitcoin from its current value of 35K. Although Michael Saylor's substantial holdings may influence his perspective, the imminent approval of a spot Bitcoin ETF in the USA seems increasingly likely. The approval rests on whether Gary Gensler gives the green light, but signs indicate its impending arrival. Furthermore, influential developments like fair value accounting rules, advocated by Michael Saylor, are creating a pathway for more corporations to safely invest in Bitcoin, ensuring favorable treatment from the IRS. Another noteworthy catalyst is banks embracing custody and lending against Bitcoin as collateral, taking the cryptocurrency to new heights. Prepare for Bitcoin's ascent with ETFs on the horizon as a tidal wave of money is poised to enter the market. Anticipate unprecedented growth amidst the looming fiat collapse as America contends with an overwhelming $34 trillion debt and banks hover on the brink of collapse. Chaos reigns. In this tumultuous scenario, Bitcoin emerges as a beacon on the hill, a truly mind-blowing convergence of events. Now, turning our attention to the dollar, it's quite a convoluted situation, isn't it? The more one delves into the intricacies of the US dollar, the more apparent it becomes that it stands on precarious ground. While currently a robust currency and a major player, the question arises, how long can this stability last? No reserve currency has proven immune to the test of time, and with the burden of a $34 trillion debt, it's doubtful that the US dollar will be an exception to this historical rule. Consider this final reflection: nothing ascends in a linear fashion. As we witness a significant rally with altcoins making substantial moves and Bitcoin achieving remarkable feats, it's exhilarating. Altcoins like Chainlink, for instance, have experienced astronomical gains, up approximately 100% since our initial discussions on this channel. If you heeded the emphasis on buying and averaging in on Chainlink, you're now enjoying a fantastic 100% increase. However, it's crucial to recognize the unpredictable nature of markets and the inevitability of pullbacks. Even if a Bitcoin ETF gains approval tomorrow, sparking a rapid surge, one should not dismiss the possibility of sharp pullbacks. If we must wait another 60 days for a Bitcoin spot ETF approval, brace yourself for potential rough patches. Restlessness among investors could lead to market fluctuations. It's the quirky nature of these markets. Here's an intriguing statistic from J. Martin or Ya Martin. The CME exchange, favored by institutional investors, set a new record in open interest with 138 BTC contracts valued at $3.6 billion. In comparison, Binance surpassed this figure with an open interest of around 113,000 Bitcoin. Historically, when this metric exceeded $12.2 billion, it resulted in a minimum 20% decline in the price of Bitcoin. Food for thought, indeed. It's essential to remember that we lack a crystal ball to predict pullbacks. They may be triggered by news or unexpected events. Prepare yourself for significant pullbacks during the bull market cycle. It's par for the course. Embrace them, welcome them, and be prepared. Rushing into new highs for coins is not always the optimal strategy. When something experiences a surge of 100%, exercise caution against succumbing to FOMO. Fear of missing out is not a reliable ally in these markets. Let me clarify, I'm not sitting on the sidelines. My holdings are well prepared. I hope yours are as well. Hopefully, you've been attentive in the past year as I consistently emphasized that this is an accumulation period, a time to build up your holdings. Now, the momentum is starting to gain traction. I've set bids for Bitcoin at $30K and Chainlink at $10, just in case there's a substantial pullback. I'm ready for any potential scenario, whether the market continues its upward trajectory or experiences a surge. I'm prepared. Let's just say my holdings are quite substantial at the moment, and I'm equipped for either outcome. I'm open to increasing my positions, and if those bids remain unfilled, that's acceptable. However, be assured, pullbacks are on the horizon. We might witness further upward movement before a notable pullback, and my bids may not be executed. I'm prepared for that likelihood. Nevertheless, it's crucial to manage that FOMO. I understand the excitement in the market is palpable, but remember, we are still in the early stages of this market cycle. If the market performs even halfway, as well as some analysts predict, there are still ample gains to be realized. At this juncture, it's a marathon, not a sprint. Get sufficient rest, exercise caution with your finances, Adopt a long-term perspective and we'll navigate this journey successfully. I'll catch you in the next video.